Mortgage rates hover in the 6 to 7% range with no signs of a meaningful decline, at least in the near term here. Affordability, a sore spot in the housing market as prospective home buyers look to the spring buying season. Here with the very latest pulse on real estate, we have Compass founder and CEO Robert Reffkin. Robert, good to see you.
Glad to be here. Thanks for inviting us.
So spring selling season, what are you expecting? Should we see a big jump in inventory?
Yeah, so at Compass, we have a very unique perspective. We're the number one brokerage firm in the country. We have over 30,000 agents. We're in every major market in the country. What we see is 26% more inventory today than the same time last year, which is great because more inventory equals more sales. Last year was defined by sellers sitting on the sidelines, and it translated to the lowest level of transactions since 1995. So we feel like we're in a much better place now. And last week, we actually saw 13% more homes under contract than the same time last year.
And that's really been one of the bottlenecks, at least, right? Has been the amount of inventory. I'm curious, so it's up 26% from last year. How does it compare to the prior year or prior years? Are we still a pretty far cry?
I'm glad you asked that question. For context, we're still 40% below the pre-pandemic level of inventory. This country just doesn't have enough inventory.
And Robert, with the 30-year fix where it is, how much of a headwind is that for the market?
It's a headwind for both buyers and sellers, but really more for sellers because a year ago, we had 72% of homeowners locked in at 4% mortgage rates or below. So the difference between a 3 and a 7 is just too far off. Fortunately now, it's about 58%. So it's going down about 1% a month. We call it that lock-in effect, locked in from selling their homes because of their low mortgage rate.
How does it? Can I just ask real quick? How does that impact sellers, though, Robert? I mean, what does that impact pricing, for example?
It impacts their willingness to sell. The sentence you'll hear from sellers is, "I have a 2.5% mortgage rate. Nothing would get me to sell my home." But there's a dynamic at play. We call it the 5 Ds: diapers, diplomas, diamonds, divorce, death. And that keeps the market moving, those life events. And so those life events are what bringing the 72% down almost 1% a month to what we now have around 58%.
And yet, maybe that mortgage rate is vying with those life events. I mean, we saw a recent study from John Burns Institute that they survey people regularly on what are the things that is holding current homeowners back from purchasing a home. And they said for the first time ever, waiting for mortgage rates to decline was actually higher than those life events. So what is going to change that? Is it that those rates are going to start to decline?
Well, I think the Fed lowering rates would do more for the real estate market than anything else. Right? That's the biggest bottleneck because 7% is still pretty high from recent history. It's low from a 30-year perspective. There are a lot of agents at Compass who say, "I remember when mortgage rates were 20%." But we are hopeful that rates will come down to the low 6s at some point this year. I think the magic number to completely open up the market would be high 5s and maybe even 6, because the last fall we saw 8% mortgage rates. And so in a way that was hard last fall, it really slowed down the market. But from this perspective, it's great marketing, 8%, that 6% mortgage rate is a great deal.
And Robert, who's buying a home right now? Do you have sort of line of sight into that? Because it's hard to imagine. Tell me if I'm wrong. That it's a lot of people in their 20s, just given the affordability issues we're kind of talking about here. Has sort of the American dream kind of been pushed out here a bit?
We absolutely have affordable issues in this country. However, the very nature of having inflation means that there's a lot of money out there. And what we're seeing is people are buying across ages, across geographies, but the hottest markets are the markets where the employees are paid in tech stocks. So San Francisco, Seattle, where you're paid in Amazon stock, Microsoft, Facebook, et cetera, where it's at an all-time high. You don't need a low mortgage rate if your stock portfolio is at all-time high. New York's benefiting from that a little bit with Wall Street, as well as some of the other tech hubs.
I have to ask you about the settlement, that is going to change, we think, how buyers and sellers are paying their buyers and sellers brokers, because that's something that could affect Compass. I think everybody's trying to figure out how. And so as someone who runs a company that this is going to affect, but it's an uncertain outcome, how do you plan for this? What do you think is going to happen?
Yeah, look, I think the headlines have been much more dramatic than the details of the actual requirements. There are headlines that say NAR eliminates the 6% commission. NAR doesn't even govern commissions. And so there are two changes, only two. I think they're fair. One is that the MLS website, just a website, will no longer be able to hold the commission that is paid to the buyer agent. And the second is that buyers will have to sign a buyer representation agreement with their buyer agent. So I think it's not as dramatic as the headlines have described, and I don't think things will change as much.
Do you think, Rob, this could impact the pool of realtors out there? Because I've heard some people make that argument. Maybe you'll see fewer realtors because of this.
I think if you are thinking about becoming an agent and you read headlines and you're thinking about becoming an agent in the next 3 to 6 months, you may decide not to. So maybe you get less people coming in. I think if you're an agent and you've been doing this for less than a year and you see the headlines, they scare you, you may leave. But if you are a professional agent, I don't think there will be any professional agents who leave the business because of this.
Well, and is there also an opportunity, if there is going to be more negotiation between a buyer's agent and buyers, is there also an opportunity, if you are an amazing agent, to outperform even more than in the past? Or I'm still trying to wrap my head around all this in full disclosure.
Yeah, no, look, it's a good question. Commissions have always been negotiable. And so from that perspective, they'll be able to negotiate in the same way they have in the past. But I think to your point, if you're an agent and you think that your services are worth more than others, I think this gives you an opportunity to say, I think I'm worth more, and my services cost 3+%. And I do see that in the market. Agents independently come up with their commissions. There is no standard commission out there across the MLS. You can look in the MLS. There's all kinds of permutations. And so I think you are right that you may see some truly great agents, just like truly great lawyers, truly great doctors, command a higher commission than others.
Interesting. All right. Well, to be continued, I'm sure, as this evolves. Thanks so much, Robert. Really appreciate your time.